Good evening, everybody. I know I'm dragging some of you away from the Pittsburgh Penguins game, but it will still be going on when we get done. Obviously, the Penguins are going to win. All right, we're going to retrace once again back to the T-line. We get so many questions on the T-line, and I'm not sure whether everybody understands how powerfully effective the T-line is. So that's why we call it the unfair advantage. So if you've seen this before, hang in there because there's a few pieces of high profit evidence that I've added to kind of improve the probabilities of being in the right place at the right time. So the T-line is basically the 8 exponential moving average. So anytime we look at a chart, as you can see, most of my charts are fairly simple. We've got the 200 simple moving average, the 50-day simple moving average, and the 20-day simple moving average. And the reason for that is all the money managers around the world use those moving averages to make their decisions about their portfolio. So the plus side of candlesticks is we can see exactly what the investor sentiment is when it comes to one of those moving averages acting as a support or resistance. No, eat those penguins. So now the important one is this black line. That is the T-line, the 8 exponential moving average. So the reason it is as effective as it is everybody and their brother, everybody has the 200, the 50, and the 20 on their charts. Yeah, and that's because every major money manager uses those to make their decisions of what they're going to do with their portfolio. Now you got to realize that usually a money manager who might be managing billions of dollars, if they're going to come in and buy IBM, they're not going to be able to fill it in one day. They're probably coming in to buy 600,000 shares or 1.5 million shares, and it may take them a couple of days. But they've got to start someplace where there's a logical spot to trade it. So the T-line, and this is kind of the crux of using the T-line. Let me get to that in a second. T-line works effectively on a 5-minute chart, a 10-minute chart, a 30-day or a daily chart, weekly chart, or monthly chart. You can trade just as well on the Dow 10-minute chart using the T-line as you can the 1-minute or the 60-minute. The rhetorical question is, what is the T-line? It's the 8 exponential moving average. And because nobody has it on their charts, it acts like a Fibonacci number, a natural number. So if you just put into context that the visual graphics of candlestick signals are what's going on in investor sentiment, basically using the open and the close. And so if you use the candlestick definition that the candlestick signals are the accumulative knowledge of everybody buying and selling during a specific time frame, and that's kind of the measure of investor sentiment. And then you add the T-line, which nobody uses. The other moving averages act like magnets because everybody's waiting to see what happens at those levels. Nobody, or a very, very minute percentage of the world traders, have the T-line on their chart. So it works very effectively, and the only reason for that is it acts like a natural support and resistance to human nature. So if you take the graphics, the candlestick signals, which are the cumulative knowledge of what's going on in investor sentiment, and add the T-line, which acts like a Fibonacci natural support and resistance, you add those two together, you've got an extremely powerful combination of telling you what's going on in the trend. Let's see. You read in the white paper that indicated the 8 exponential moving average is statistically best compromised between the efficiency trend and least lagging behavior of all indicators. Oh, so, and the T-line, yeah, the T-line definition, we were trying to figure out what to call it, whether the trigger line or something else. We use the T-line just as short, the trigger line. So there's a very simple rule of the T-line, which is if you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close back below the T-line. Conversely, if you see a candlestick sell signal and a close below the T-line, you can stay short until you see a candlestick buy signal and a close back up above the T-line. So this isn't rocket science. This is, and I tell people, don't take my word for it. If you're learning candlestick signals or trading any trading method, put the 8 exponential moving average on your chart and see how often the trend continues down or continues up based upon what's happening at or above or below the T-line. So if we're looking at something that has a easy trend analysis, in this case, with that pop-up, we'd expect a 45 degree, which is just kind of an uptrending channel. And pretty much you can stay long until you see a sell signal and a close back below the T-line. So this makes for additional confirmation that if we're looking for sell signals at important support and resistance, like the 50, and not only was there a sell signal, but they brought it back down through the resistance level of the 50 and below the T-line, not only told you not to be in it anymore, but it's time to go short. So this all boils down to that the probabilities are extremely strong that if you see a candlestick sell signal and a close below the T-line, you want to be out of it because that's told you there's been a change of investor sentiment. Very simple candlestick truisms, especially with the T-line. One is, the further, remember, we just went through the rule that if you see a candlestick sell signal and a close below the T-line, you stay short until you see a candlestick buy signal and a close above the T-line, with the caveat that the further away you move from the T-line, the higher the probability it's going to come back up and test it. So if you were short here and you started seeing buy signals, where do you think your first target is going to be? Probably back up, test the T-line. At that point, you can decide whether to cover, if you went long here, whether it's time to cover that long position if it fails the T-line, or continue to hold until it goes to the next resistance level. Again, the further you move away from the T-line, the higher the probability it's going to come back and test it. Once you are in a trade, for example, long, do you always stay in until you get both a sell signal and a close below the T-line? And the opposite for a short? Pretty much, Peter, and I'll kind of go through. What we're going to do is we've got probably 15, 20 minutes of canned charts that I've used for examples through the years. Then we'll flip over to live charts to show why or charts, look at charts right now that it works well, or why it's working well. This gives a lot of false signals. I usually wait for, I don't know, Peter doesn't give a lot of false signals. Is that a question or a statement? Do you need to wait for confirmation? Remember, the number one criteria for any trade is the signal itself. And then the additional confirmation is the T-line. So again, if I was long and I started seeing sell signals up here, I'd be much more prepared to take profits on the confirmation of a sell signal because I've got the additional information that I'm a good distance away from the T-line, that any selling is probably going to bring me back to the T-line. So the correct trade parameter is take your profits. Now, I'm saying this because I always had a hard time taking profits, because if I finally got into a trade, and this was before candlesticks came along, that was working well, my first thought was, man, I don't want to sell this because this might be the big one for my lifetime. This one's going to make me rich. And I wasn't going to sell out here because if they got me out, they'd turn it right around and head back up. Well, at least now I can see when the probabilities say it's time to sell. And if there's a J-hook pattern, which is one of the our signal patterns, I can always buy back in. But what I don't want to do is anticipate they're going to take it back up, which they may not do after that sell signal. The green line is the 3T line. The 3T line is a 3 exponential moving average, and it becomes more effective the further away you start moving from the T line, but that'll be a whole different session. Okay. Would you set a stop loss at the previous candle? Lynn, you're going to have to tell me which one it is. Yes. The T line is the 8 exponential moving average. So yes, I'll get into where you set stop losses. So because the T line is so effective at telling you what your trend is, we've got some patterns or use of the T line that tells us, all right, we might be in an overbought condition. We're heading for a resistance level, but we've got the T line crunched. Notice they can't even close it below the T line, and the T line crunches it right back up through that resistance level, which also makes a T line or a bobble, and the bobble is usually an initial test of a resistance level and fails. Then the price retraces back to the T line, then followed by another approach of the resistance level to test it again. And when it goes through that resistance level, now it's producing a bobble J-hook pattern breakout. So anytime I see something where they've come up and they've hit a moving average and pulled back and can't close below the T line, if I've taken profits in here, I'm ready to buy when it comes back up through this level. We've got some same scenario. If it comes up here and I see it pulling back and I take profits, I'm ready to buy it again as it's starting to approach that resistance level, because what's going to happen? You're going to have a J-hook pattern to the upside. So this is the bobble. This is kind of a more refined J-hook pattern. Remember, our J-hook pattern is a strong price move, an indecisive pullback, and then it J-hooks back to the next move to the upside. So wave 1 and wave 3 are the same. Yes, there are charts on here, Tom. Okay. So this becomes a much more defined evidence that the J-hook pattern is in progress. We can see the bearish Harami doji and a failure, so we're taking profits. Now we can see that we have a doji sandwich coming back up through. What do we know about the doji sandwich? That there's going to be more follow-through. What do we know now about the bobble? That is probably going to put us into wave 3. So it just gives you additional evidence of what usually happens in human nature. Is they hit a failure or fail at a resistance level. Next time they come up through, you want to be buying it. On the same criteria, the same evidence, you also know when to get out of it. If this is a bobble pattern, what should happen here? It should be trading positive. The fact that they can never get back up through the 50 tells you they've failed. You close out the position. Wave 1 is right here. Then you got kind of wave 2, which is the little curl, and then wave 3, which should be the next pattern to the upside. So I got a wave 1 right here. The bobble pulls right back to the T line, goes through the second time. So I know wave 1 and wave 3 will be equivalent, in this case better. A little arrow over the comment there. So anytime I see this type of setup, where if they can't get through, and they start selling it off, all right, I've got profits. I'm going to take my profits. When am I going to buy? The next time I see a buy signal and a close back up above the 200. So this is a case where before candlesticks came along, if I closed out a position, they weren't going to trick me and get me back in. I took my profits. I'm going elsewhere. Now at least I know what human nature does and when it's the appropriate time to get out of a position and when it's appropriate time to get back into a position. So again, the T-line crunch is versus a bobble. I mean, there's only a slight difference. The T-line crunch doesn't come up and hit the resistance. It just kind of pushes right through it. So anytime I see something like this, remember what our simple rule is of the T-line. You see a buy signal and a close above the T-line, you stay long until you see a close below the T-line. And if I can see they're getting up here and they still can't close it below the T-line, that tells me they're going to bust through. Now, where do you think everybody that does not have the T-line on their chart, what do you think they're watching? They're watching to see what happens once it gets to the 50-day moving average. We can see ahead of time what's happening, that they're not selling it off. So we're still in the position when probably everybody starts piling in once they see it breaks that level. So again, the T-line crunches up into it, crunches right up through it, doesn't do the bobble pattern. And the T-line crunch doesn't necessarily have to be at a major resistance level here. You can see there's kind of a resistance level across the top when it broke out to the upside. So resistance level could be a moving average, a trend line, a previous resistance areas, anything that we can identify that there's going to be some selling at that level. Once it breaks through, or we can see the pattern trying to break it through, we want to stay in it. Yes, it works in all time frames, Michael. It is just as valid on a major indexes. Remember, candlestick signals are the accumulative knowledge of everybody buying and selling, and the T-line is that natural support and resistance of what's happening in human nature in a trend. So it doesn't matter whether you're trading stocks, bonds, currencies, commodities, futures, tulip bulbs, anything that has fear and greed. I always tell people, prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. And that's essentially what candlestick signals provide for us, is what's actually going on in human nature. And remember, the signals are not an indication of what might happen. The signals are what is actually happening. Can you show the first 3 slides just a second or two? Oh, the first 3 slides from the very beginning, BH. Remember, this is all recorded, so all right, so not only you use the T-line crunch to just stay in a position, or you can both. If I didn't happen to get in here, and I can see that it's trading up here, well, where's my probabilities improve? If I can see that they're eventually pushing it through, I'm buying right here, because that tells me they push through. Oh, the very first 3, let's see, we're on number 35. This one, and this one. All right, let me go back to. All right, it's also very effective. Again, if we use a simple analysis, the further away we move from the T-line, the higher the probability is going to come back and test it. Well, if we're looking at, or if we're in a pattern that we know is going to work effectively, like a fry pan bottom breakout, where is it time to start taking profits? We can see over here, we're starting to move away from the T-line. That becomes the warning that it's time to start taking profits. And I don't know why I don't have the other charts to show where once we move up here, and notice how far away the 3 T line was moving away from the T line. that's when we flip to the 10-minute chart to see what we should do. Yes, Christy, in all three books, if you just learn the basic rules of what happens in human nature, it's there over and over. That's why in the chat rooms you hear me say the same things over and over, because human nature doesn't change. You wait for the stock to be above all four averages before. No, we're not buying the averages. We're buying the signals. You give us the book names later. Yes, I could probably give them to you now if I could remember them. The one that I would suggest is the first one is High Profit Candlestick Patterns. It's on the website. The first one that was printed by Wiley & Son was Profitable Candlestick Trading. And then my third book was Profitable, let's see, I can't even remember the name, but it's Eliminating Your Emotions Using Candlesticks. How do you scan for these stocks? Very simple. Each signal and pattern already got the formulas written. They're done for TradeStation, Thinkorswim, Warden Brothers, Metastock, Ninja Trader, and 3 or 4 others. Plus the signals and formulas are all on our website. We've got 1,300 pages on our website, all oriented toward candlestick analysis. My stochastics are 1233. Nothing set in stone. It's just that one night I sat down and said, where's the bottoms and where are the tops and what do they correlate with? And since I'm a swing trader, 1233 was working a lot better than what was the standard back then. Now the standard, that was back in the 80s when I started doing all this. And at that time, there was nobody around doing candlesticks. But the norm at that time seemed to be 1455. So the further away you move from the T-line, and then you flip to your 10-minute chart and start taking profits. Now, somebody was asking, does it work for the major indexes? Yes. So the first thing we do is we analyze what's happening in the index. Then we know if I'm going to scan tonight. Greg, it's already in there. Somebody might be able to give you the link of how to get to it. I want to know which way the market's going. Obviously, a bullish scan is going to find better situations than a bearish scan in an up market, and vice versa. If the market's heading down, I'm going to be more apt to be looking for bearish trades, short trades. The scanning formulas, they're all over the place. We've got, if you go to our website, www.candlestickforum.com, over on the left-hand side, you'll see the formulas for Warden Brothers, and that's the basic formulas for everything. All right. Also, candlestick signals give you a much more clear evidence of when a trend or a channel is working, where you see the buy signals, where you see the sell signals, and it also tells you when a trend channel is being breached. So if we can see that T-line crunch coming up into the resistance level, you blow up that area, see it going up through, that tells you there's a different dynamic. They've now broken through the uptrend. So what we're using the T-line for is telling us there's an uptrend until we see that sell signal and a close back below the T-line. Yeah, I think Stock Fetcher, if I've missed your questions, when I get done here, I'll go through as many questions as we need to. Same scenario. Here's Kroger. Every time it pulled back and closed below the T-line, you close it out. But what's our simple rule? You see a buy signal to close back up above the T-line, you stay long until you close it out, and you don't see another buy heading back up. You stay out of the positions. It also allows you that if you see a big price move, what do we expect after a big price move? This is kind of our 45 degree. And as long as we stay long or stay above the T-line, we can stay long. Now, we had a bearish day up here. So what do we do on that? Well, we already have the analysis that this trend has been pretty strong above the T-line. Either this is the reversal or this was just a bad hair day. So what do we need to see the next day? We're just simply looking to see if they're going to take it back up. If they open it lower and start taking it down, yeah, that told us it was a reversal. We close out the position. Here it is. So if we get into something like this, we have that fry pan bottom breakout and we're moving that far away from the T-line. Was this day too far away from the T-line? Well, if we flip to our 10-minute chart, we can see that at the end of that day, they were still trading up. The next day, was this the time to be selling? Again, we go to our 10-minute chart. They took it up. We closed it out when it came back below the 10-minute T-line. And then it turned around and came back up. We bought it back. So why would you buy back a position as it came back up and you're way up in the overbought area? Because that's the knowledge we have about a fry pan bottom. What do we expect coming out of a fry pan bottom? A very strong price move. So we got back in, made this profit. Next day, opened lower, we closed out the position. So it just allows you to have a game plan, knowing what to expect from big price moves or from candlestick reversals. Another chart, gaps up. You have a big price move. Should you buy a stock that's already up 5%, 7%, 13%? Well, I wouldn't be buying right here because I don't know if it's going to hold up the T-line on the 10-minute chart. I'd be buying here because it told me it was holding at the T-line. I might not be buying here, but I'd be buying here. And what was this telling us up for most of the day? They weren't closing below the T-line. If I'm trading on an intraday basis, I think this might have been either soybeans or one of them, but you see what was happening. If I was buying here, I was closing out here. I was buying back here, and I'm holding on to it because what do I got going on? A T-line crunch. If it failed here, close it out. Well, what happens usually at the T-line crunch area? That's usually when they start breaking things to the upside. So, or if I didn't bother to be in here, when would I be buying? Right here, crunch was pushing this up through that level. If I see a big price move, what do we usually expect? Some profit taking. Notice what happened on this profit taking on a daily basis. They couldn't even close it back below the 3T line, let alone the T line. So all we do on this one is, even if we didn't catch this move, but we know this is a nice breakout, we just wait until the profit taking's over, and then we can be buying. And how long do we hold this? As long as we don't see a sell signal and a close back below the T line. So trend line analysis is just very simple. For example, this was July corn today. It opened up today and started trading. It was up and then started trading back down through the open. What was that an indication of? Well, that was right about the same level it topped out before. So all we do is when it broke down, we went short. And usually after a big move like this, now this is actually after hours and then this was on the open. I've got a very simple trading rule on an intraday basis. If you see a big price move, I stay short until I see the first signs of buying. Then I close out the position. Then we went long right here because what did it tell us about the T-line? If they weren't resisting at the T-line, it moved up pretty nice from there. So, and what else do we have going on right here on the 10-minute chart? In the 10-minute chart, we are a good fur piece away from the T-line, telling us any buying here is probably going to at least pop us back up to the T-line. So I take profits right in here. Then, after that, you can always make your assessment of what's going on based upon what the next signal or pattern is. Same scenario on lean hogs. Here's the daily chart. A couple of days ago, it did a doji right smack dab off the 200. And what do we know about the simple rule of a doji? that it's going to move in the direction how they open it the next day, or they opened it positive. Then today they opened it positive, and what was our first target? I at least back up here to the T line. So in that case, I'm buying right here, and when do we take profits? On the first confirmed sell signal. So it was up pretty strong. It opened, went up again, and where do we set our stop? Right about in here, because if it came down through there, what's it doing? It did a doji. Now it's going to do some sort of shooting star doji. And how far away are we from the T line? So it's probably telling us we're coming back here on the 10-minute chart. Once it gets back here, you can always make another decision as to whether it's time to buy based upon what it does here at the T line. Anyways, using the T line is very, very effective. We've had John Bollinger on a couple times. Bollinger Bands are good for telling you what your range is. Some people like to trade the off. Let's put it this way. I've been trading for 40 some odd years, came by candlesticks by accident, but the combination of the T line and the candlestick signals just puts you in not only in the right direction at the right time, but tells you when to get out of a position and when to get back into a position. So that's kind of the canned part of the session. And I think just because people had to sit through it, Pat is doing a special that and let me just describe the special, and then we'll go on to the live charts to see how this works on live charts today. This special is, I guess, for what they call the triple T trading, which involves using the T line for the best entry strategies, the T line crunch, the breakouts of fry pan bottoms, the slow curve, which we didn't even get to. A slow curve is probably one of the most profitable trade setups that I've come across. It's like a fry pan bottom, but much more concentrated or much more short term. And trading for those fast profits. So it really shows you how to protect your gains using the candlestick signals and the T-line. Alerts you when a trend is about ready to turn against you or turn with you. When it's safe to stay in a trend, the optimal selling points, the optimal buying points. Again, all of this puts the probabilities in your favor. And I think the package, that whole package is $717. But this special, I guess just for tonight, is $497. And with that package, again, you're going to understand where the buying and selling become the most critical and the highest profit entry and exit strategies. Is there a program software to highlight the candlestick signals? Yes, Metastock has one. I don't know if there's other software programs, but Metastock's got the best program. We've taken probably 18 different patterns that are your high probability reversal patterns. So it not only Jella, the best thing to do is email Abraham. Toss has it also? Okay. Because we've been working with all the software companies over the last couple of years to get them the formulas so they can develop all this or develop all their scanning. Also, if you want to see the Metastock training session we did within the last couple of weeks, if you'll just email Abraham at candlestickforum.com. Jim, you want to type his email address? Just tell him to send you a link to the Metastock training. Is there a recommendation for using options? Yes. CEH, give me a minute. We're going to flip to the live charts, and I'll show you some of the options, or at least one option strategy we recommended today for Amazon and some of the other ones. All right, Jim, let me do this real quick. Let me shut this down, and we'll bring up live charts to trading right back at the T-line. So it makes it very simple. If they close this below the T-line, where do you think they're bringing it back to? Probably back to the 50s. To stay long, it needs to trade up above the T-line. Let's see. I think this is the euro. Same scenario. After the big shooting star, you close below the T-line, you stay short. But notice where we are right now. We're starting to see some support right here at the 200. Not yet above the T-line. More than likely, I would have, if I was short, I would have covered the short here, but I'd be ready to re-short it if they closed more than halfway down this candle. That would have told me they failed there at the T-line. Yeah, the Dow Jones. Okay, this is the chart on the Dow Jones. So this is where we do our basic analysis. Which way is the market moving? And as you can see, had a nice steady uptrend, did some profit taking, bought back in, closed out, tried to get back up. So if it had opened positive on this day, confirming they were breaking this downtrending channel, I would have told us we had a reversal. However, the next day, that killed that potential close above the T-line, told us the downtrend was still in progress until we saw our bearish or bullish harami. And very simple, the bullish harami is one of the 12 major signals. Tell you the selling has stopped. Then there's our doji sandwich taking you up through the T-line up to the 50. And so when they opened up positive yesterday and started trading at positive, what were they telling us? The 50 wasn't going to act as resistance. The T-line wasn't going to be acting as resistance. And this downtrending channel was not acting as resistance. That told us we're probably now back in an uptrend. And what type of uptrend? If this is wave one, this is wave two, we might be in a pretty extensive uptrend. And where do you think the first target's going to be? If this was our trend, this is where it could potentially move to get right back into that trend channel. More compelling was the analysis of the NASDAQ. Notice up here, they couldn't get up above this level until they had a doji gap down telling us they were pulling back. There's our piercing signal. Did a failure, but not a reversal, just a failure at the T-line. And then look what happened over here. At the same level they started buying before, you had a doji gap up through the T-line, broke this downtrending channel with a doji sandwich, broke through the 50, gapped it up again. So they've gapped this up, telling us there was strong buying coming back in. Same analysis. If this was our existing trend, they could bring this up pretty strong, get back into that trend. Is it a bearish harami today? In which one, Niall? Remember, signals are signals when they are occurring in the correct area of the stochastics. So no, remember your stochastics are still coming up. You're not anywhere near the overbought condition. A bearish harami is going to be effective in the overbought condition when you see the bearish harami. And remember, a bearish harami has to open below the previous day's close, which it didn't, it opened above it, and close above the previous day's open. So all this was a downtrend or down day in an uptrend. Okay, so if we're looking at other influences on the markets, we're still long crude oil, because notice what happened when it came up through the, this is just logical price move. They brought it up to the 200, did the bobble, took it up, and what happens when they go through a major resistance level? They'll come back and see if it's going to act as support. So we're right now in the next wave to the upside, and how long do we stay in crude oil? Until we see a sell signal and a close back below the T-line. Overbought and oversold. Yes, I use stochastics at 12.33. Below 20 is oversold. Above 80 is overbought. So the logic from candlestick analysis is, if you see a candlestick reversal signal, bullish signal, in the oversold condition, the probabilities are pretty strong. That's why we're looking at them after 400 years, that you're in an uptrend. On the other hand, if you see a candlestick sell signal in the overbought condition, more than likely that's where the reversals occurred. So in this case, right off the 50, they did a best friend signal, a doji followed by a gap up and a close above the T-line telling us our uptrend was in progress. We also are short coffee right now. We've got two rooms. We've got our our main trading room for mostly stocks, and then we've got our futures room and options room that we go through different strategies. So we shorted coffee because up here, notice how far away we were from the T-line. Now they're down through it. How long do we stay short? Till we even see a buy signal. Where do we think we're going to see our first buy signal? Probably right here in this area. If it doesn't, what's our next target? The bottom of this trend channel. So somebody was asking earlier about what type of, can you trade options? Yes. If we know the market is probably heading up, and we're looking at Amazon also supporting on the T-line with kind of a slow curve, notice what it did today. This is, again, our bullish doji sandwich. And we know the results of a bullish doji sandwich. There's going to be more upside. So if that's the case, where do you think our upside potential is? We took a trend channel, put them right up through the top here. You pretty much have kind of the parallel channel going on, staying above the T-line. Where do you think our next target is? Probably up here. Now, looking at the June 7/17s, they're trading for 12 bucks. A lot of people don't want to spend that much money on an option. So what's your other strategies? Well, we went to the June 735s and the 740s. If we bought the 735s and sold the 740s, that was at a net cost of $1.36. So as a much safer trade, we could probably pretty well get past that level without too much risk. But what was our reward? That $1.36, once it goes past 740, is now going to turn into $5. So essentially we're a little bit more than tripling our money with a much lower exposure as far as money, and our break even is much lower. To make the same return, if we bought the calls outright, let's say the June 7/17s, you'd probably have to get all the way up here to make the same percentage return. All right, so let's see. I'm going to take a look at some of the other. We were trading lean hogs. Where's our signal? Again, there was that doji harami right off the 200, and now they've closed up above the T-line. Where do you think our next target is going to be? You can pretty much draw a line through here. So if you drew a line through here, our next target should be up in this area. And the same, we've been trading gold, but we're kind of sitting on the sidelines right now because gold had a nice uptrend or a nice fry pan bottom, but it didn't break out. And when it did the hanging man type, and then traded lower, right now you should be short. But now notice where you are with stochastics. Started to move away from the T-line. Might be seeing some reversals, getting ready to buy again. So again, it just gives you a feel for when things are starting to move in your favor. For example, notice we had the kicker type signal. That was your best friend signal, the doji gap up through the T-line. And what was the T-line telling you? It was acting as a resistance all the way down. So we've been long this one, both in the stock and the options, doing very well because what do we expect after a best friend signal? The reason we call it your best friend signal is because this is the most powerful, or one of the most powerful, if I'm quantifying them, out of the 18 powerful reversal signals, I've got the best friend as number one for two reasons. Not only is it going to tell you it's going to be in an uptrend, but it's also going to tell you it's going to be in a strong uptrend, and the frequency is quite often. You can always find these type of signals telling you the new trend is in progress. So we bought this a few days ago, still way too far in front of the June expiration to do a spread. So we bought the calls outright, and they're doing well right now. Again, basically putting the probabilities in our favor of being in the right place at the right time. SWN, notice what the fry pan bottom was doing right here. Couldn't get away from the T-line. Still makes for a very strong probability of being a fry pan bottom breakout in the next couple of days. And what do we expect from a fry pan bottom breakout? A big price move. There's that inverted hammer, gap up. What did it tell us about this trend? That it was broken. We're starting to head back up. I think Alaska Air, this is one. Does every trade work? Obviously not. But the benefit of candlestick analysis is not only does it tell you when it's time to be in a high probability trade, it also tells you when to be right back out of the trade when it didn't work. Let me go through a few of these. Apple, when it broke up, inverted hammer, gap up through the T-line, where's our likely target? Well, it's starting to move away from the T-line, but I would suspect they're going to try to test the 50-day moving average before you see some profit taking. Same scenario on Netflix. Morningstar signal, kind of a doji sandwich, left-right combo. Where was it heading? Probably up here to fill the gap right here at the 200-day moving average. IAC is one that has a nice J-hook pattern setting up. Remember, the very simple rule of candlestick analysis is the bigger the signal, the more compelling there's been a change of investor sentiment. So now we had a strong price move, and notice the pullback. I mean, you can see how aggressive or compelling the buying was here, and you can see how indecisive the selling was. Lots of dojis. Then your next buy signal, left-right combo. And what pattern is it setting up? It's been setting up the J-hook pattern. And notice the pattern we're seeing right now. This is what you call three white soldiers, where they take it up, next day they open it lower, take it up, open it lower, take it up. I'd be a definite buyer at this level, telling me they've broken out going into wave 3, because you're essentially getting all the bullish signals that you want to be looking for. Things like the T-line crunch. There was Devon Energy crunched right up through there. You just stay long until you see a sell signal and a close below the T-line. Whiting is another oil company that's kind of got this T-line crunch, fry pan bottom. At this point, we're long, and we stay long until we see it close below the T-line. HCLP, notice the T-line crunch, notice the big fry pan bottom, notice the doji sandwich that brought you back up above the T-line. So it's got all the indications that you're getting ready for a breakout going into wave 3. If this is wave 1, wave 3 should be up in this area someplace. Same magnitude of move. Let's see. Just a few more, and then we'll CEQP. Again, there was that fry pan bottom, and they broke through the resistance. Telling you there's going to be a lot of upside coming out of it, out of this level. The biotechs, this is why we could stick with a specific sector, even when the market was soggy. You could see that the biotechs were picking up steam. We recommended ACAD quite a few days back because you had the Notice where they bounced with buy signals, right off the 50 through the T-line, through the 200. And what type of pattern is it setting up for us on the long term? There's wave 1, there's wave 2, going into wave 3. How long do we hold this? Until we see a sell signal and a close back below the T-line. CNX we recommended today. There was our left-right combo, one of the strongest reversal signals, right off the 50, close above the T-line. Get a doji today. And what do we know about the doji? The price is going to move in the direction of how they open it after a doji. So if they open this positive, we know that this day right here will probably be the equivalent to this day right here. And what's that tell us about our downtrending channel? It tells us this level has been breached. We're in wave 3. Just gives you a good probability of when a breakout is going to occur. The Amazon debit spread, because we can calculate that at least we could move up into this area, that when we looked at the premiums in these 735s, we bought the 735s and we sold the 740s for $1.36, which means that gives us a lot of safety that if they move up above the 740, which they could move all the way back up to the top of this channel, that our $1.36 has now moved to $5. And the same return if we just bought the 717s outright, since they're the closest, for 12 bucks, you'd have to see that stock go all the way up to the top of the trend channel to get that same rate of return. So the spread, even though I don't buy spreads usually this far out, we know that this is probably going to continue to move up into this channel area. You set the stop at the bottom of the real body or at the wick. All depends on what we've bought or when we bought. If I see a body, let's say I was buying on this day because of the bullish engulfing signal, Japanese race traders have a very simple technique. If this was the candle that told us the bulls were in control, what would tell us the bears were back in control? If they could close it more than halfway down the candle, that would tell you they were back in control. So this is part of that where everybody tells you to cut your losses short and let your profits run, but they never tell you how to do it. Candlestick analysis has very simple rules of who's in control. Let's just go through a few here. We've got some that we call steady eddies, that once we've seen the buy signal breakout, all we have to do is stay long as that steady eddy stays in effect, which very simply says as long as it doesn't close below the T-line, we can stay with it. Here's one that's setting up also. You can see the fry pan bottom, and where did it close today? Right at this level. So if it opened positive tomorrow, what's that basically telling us? If this resistance level coming out of a fry pan bottom is not going to act as resistance, and what usually happens coming out of a fry pan bottom? You usually get a strong price move. So that's what you saw in Flexon today. Kind of a fry pan bottom, and they broke it out and had a big price move. Now, in the June calls, BH, do we always get big price moves like this in one day? Definitely not. What we'd be hoping for is a nice, steady, strong run. But the nice thing about candlestick analysis is it puts you in situations where the probabilities of being in a big price move is pretty strong. So when would you be buying this? Here, 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 here? I mean, it was all profitable from wherever you would have gotten in. And this is where you flip to your 10-minute chart. Say, well, I wouldn't be buying here, but I can see they're buying again. I'm buying here. May not be buying here, but I can be buying here. May not be buying anywhere in here, but buying here because what's the overall chart telling us? But even though it's up a huge percentage on the day, they aren't really selling it back below the 10-minute T-line. Okay, just a couple more. both on the long side and the short side. Here's one that you get ready to buy because there was the steady eddy. When did you close it out? Right in here. Bought it back, close it out right here. But what's it trying to set up? A J-hook pattern. So if they start closing it back up above the T-line, what's this tell us? J-hook pattern has a wave 1. Back up here tells us wave 3 should be the same magnitude. So knowing what pattern setups to look for at least puts you in situations where you've got good upside potential with a high probability. Oh boy, we're still on the 10-minute chart. That's why. So there was another J-hook pattern. What did I just do? That's what's happened on Ollie. Moved up big today with a best friend signal. Doji gap up, broke this downtrend. So what do we got going on? Wave 1. Notice where wave 2 started. There was a bearish engulfing signal. Couldn't close it below the T-line. Then there was that belt hold bearish engulfing signal, and where did they close it? Below the T-line. It was time to be out of that trade. And a few on the short side. We've been short Tiffany ever since the kicker signal. Notice what Tiffany has not been able to do. Close back up above the T-line. Tomorrow we'll probably be shorting CPA. Just notice when it climbed up, how indecisive it was until it got to the 200/T-line area, and then they gapped it down. What's that tell us? Wave 1, wave 2, wave 3 should be the same magnitude as this move right here. So anyways, this is all kind of when you do your analysis of what the chart is telling you and where the T-line is. The T-line, I used to make good money before one of my private training students came back to me after flying down from Anchorage, Alaska, and spending the whole weekend doing our private training. And a few months later, he said, look at the 8 exponential moving average. That I've done some back testing and found that every time you see a sell signal and a close below the T-line or a buy signal and a close above the T-line, the probabilities are extremely good that you're going to be in the right direction until you see the reversal of the close in the opposite direction of that T-line. So what that basically did was I was making good money trading candlesticks, but there was a lot of times I would get out of a position and wouldn't get back in it when it came back up above the T-line because I'd probably moved on to something else. Or if I saw a sell signal and got out and it didn't get back in, now I know to stay in it until I see the confirmation. The doji. The doji, one of the doji is one of the the 12 major signals. Again, the 12 major signals are kind of your bread and butter. That if you understand what happens on those 12 major signals and you recognize where they occur, you basically have the same understanding of what moves prices as somebody that's been trading in the market for 50 years. So there's a doji followed by a gap up, your best friend. Again, the simple rule of doji is it's usually going to move in the direction of how they open it after a doji. That's just a kind of a rule of thumb. ET, we do private training sessions. This year, again, it will be up at Puka Lake, which is in central New York State. You spend 2.5 days sitting with me in front of a screen. Usually there's about 4 or 5 in the private training sessions. But it's for those people that really are serious about trading. This gives them an opportunity to get the full concentration of candlesticks starting from A to Z. We start with the 12 major signals, the profit or the patterns, the entry strategies, the exit strategies, the profit taking, or not the profit taking, stop loss, how to scan for the best possible trades. But on top of it, we all stay in one house up there that I rent each year. And we get up in the morning, we sit in front of the screens, we take our breaks out on the deck. If it's hot, we splash around in the lake, come back in, and it's not like going to the seminars you used to go to at a hotel where the speaker would come in, talk for a couple hours, you take your break, come in for a few more hours, and then everybody was gone after that. We talk investing from the time you get there to the time you leave, 2.5 days. You'll be brain dead and butt sore, but we've got a lot of people in the chat room now that have gone through the sessions that are making extremely good money, because this is not rocket science. This is just common sense investment practices put into a graphic depiction. And the one thing that is good about candlestick analysis is it works. If it didn't work, it wouldn't be around for 400 years. It's $4,900 for the session. You don't have to worry about anything. All you do is, if you're out of state, you fly into Rochester. We come pick you up. We drive to the lake. Your food's all taken care of. Your room's taken care of. All you have to do is bring your laptop if you want to trade while you're there, and your floppy sandals and your bathing suit. Lunches we usually go to, there's some wineries right close by overlooking the lake, but it's to have a session where you can be getting a lot of information, but not doing it in a very, Spartan type setting. You got a lot of relaxed time, and so we don't have to be sitting in front of the screen to be talking about investing. And this is where most people have gotten their benefits from these type of sessions is if you're having a problem with an element of investing, whether you can't pull the trigger to get in or you don't know when to take profits, this is where you start. You've got 2.5 days where we can go through and talk through everybody's situation. Also, afterwards, you've got free access to any of the material on the website. So if you say, well, I want to go over the 12 major signals, you just email Abraham and said, I was at the lake. Can you send me the 12 major signals program? On a rebuy of a closed out position, do you wait for the buy signal or do you rebuy as soon as it closes above the T line? Also, when initiating a buy position on the T-line crunch, do you wait until it pushes through? Yes. I want to see that it gets through the resistance, because that's the whole point of the T-line crunch. If it failed at resistance, it doesn't done us any good. I'd rather buy it knowing that it's already pushed through. Richard, that's up to each individual. I usually just look back to say, all right, where's the resistance level? Where's the support level? It doesn't have to be, and it all depends on what time frame I'm trading on. If I'm looking at a 10-minute chart, I might be not trading any until right here, until it breaks out. So, and it doesn't matter how far back you look. What we're really interested in is what's happening right here. Then you look back and see what else might be deterring that from being a strong price move or enhancing it to be a strong price move. So if we can see things like it's supporting off a major support level, or at a trend line or a Fibonacci retracement number, we don't necessarily use other techniques. We just use those other techniques to see if that was why there was a reversal signal at that area of the chart. If the T-line crunch is, when you see something pushing through, it can be a moving average and or some other resistance level. How do you choose which stocks to consider? Jim, after you set up your scans, it takes me less than 7 minutes each night to pick out the best 2 or 3, 4 trades or whatever supply I want. If you're still learning, it may take you 15 or 20 minutes to go through the charts to analyze. Now, I put out 2 or 3 stock picks every night, not so that people have stock picks, but so they can look at their charts and say, all right, why was this being recommended? What were the parameters or criteria that this made for a strong recommendation? What do you use for scanning? I use TCNet. I use Metastock. Those are the two basic ones that I use. Okay, so back to that the special that Pat was doing. If you're using any type of technical trading, in which I hope the best one is candlesticks, if you add the T-line to it, you're going to improve your vision of when to be buying and selling dramatically. And I say that because I was a pretty good candlestick trader, but when the T-line was introduced and we started researching it, my profits just shot up mega times from there. I trade the ETFs. We're usually trading Nugget, but right now Nugget is not doing anything of any great magnitude. But in cases like this, where we can see it was breaking out, if you were buying the calls on Nugget, and you're double, tripling, quadrupling your money very quickly. Right now, it's just in this downtrending channel. There's nothing great here to be buying Nugget. Now, on some of the other ones like oil, notice you got kind of a T-line crunch coming up to the 200-day moving average. So yes, you can trade the ETFs. You can trade the indexes. Anything that has fear and greed, which is anything that we're doing, is how do you set up the T-line? The 8 exponential moving average. You put it on your chart just like you would a 50-day moving average or a 10-day moving average. 8 exponential moving average. Okay, we're pretty late, but we'll do some individual stocks. Jim, if you'll do the double line, we'll do 10 or 15 minutes of stocks. How do you place the buy and sell stops after an entry signal? Oh, very simple. I'd say very simple. I use Thinkorswim. So once I'm in a position, then you can go back. Let's say I bought lean hogs today. Well, as it was moving up, I would set stops. And all you do is you go in and say sell at a stop at this level. If it kept moving up, then you cancel it and say, all right, now if it comes back down through this level, close me out. That way, yeah, you can just like any other order, it's just you do it after your position's on. Disney, nothing here that get real excited about. It wouldn't be long, and I wouldn't be short Disney right now. Just there's not really anything you could hang your hat on. You've got this big kicker type signal to the downside, but you can see you've had some support. If it started trading lower from here, and now you can see that you have a bearish J-hook pattern. Don't usually trade Goldman either because there's usually not a whole lot of direction in this stock. All I use Goldman for is as long as it's trading above the T-line, that tells us pretty much that the market in general is not going to be falling out of bed. Sorry, excuse me. CELG, you can stay long on this one. You can see where it based down here with lots of indecisive trading. And ALXN, another one. It looks like it's in a trend channel, probably making the 200 your next likely target. So you stay long on this one as long as it stays above the T-line. Tesla just climbed up above the T-line, or the 200. Notice the little bobble. Where's your next target? Probably up here at the 50. AVXL, you stay long on this one, but you can see you've got a bunch of dojis, and we know the simple rule of the doji. It's going to move in the direction of how they open it after a doji. So if it opened lower and started trading, especially below today's low, I'd close out the position. Now, on the other hand, if it came up through today's high, I'd be a buyer. It'd be telling us that they did support on the T-line. INO, bad signal, left-right combo, but it didn't close below the T-line. And where did this occur? Right at the same level. It did a left-right combo over here. So the only way you can stay in this one tomorrow is that it needs to open and trade positive You don't want to see it trade below the T-line. If it did, I'd close it out. DAR, kind of a bearish signal today. Another one where you've had a nice steady uptrend, but you're in the overbought condition and you've got kind of a little bearish belt hold type signal. I wouldn't want to see it trade back below the T-line at all. 3, just stay long as it stays above the T-line. Whole Foods, stay long. Notice what started this uptrend. Your best friend. Remember, the bigger the signal, the more compelling there's been a change of investor sentiment. Now, the further away you start moving from the T-line, especially in the overbought condition, this is a very safe trade. Put your sell stop right here. It shouldn't come back down through that level. CBR, stay long on this one. Also use the T-line as your stop. Ocular. Nothing real exciting here. You can see it's in a trend channel. If you like it, you can be buying it, but I definitely want to see it get up through the 50-day moving average. PAC. Nothing real exciting here either. I wouldn't be long, and I probably wouldn't be short. Just nothing to tell you there's any great benefit to being in this trend. Wells Fargo. This one you can be buying, especially on a positive open tomorrow, because then your doji sandwich would be in effect. And if it was the same magnitude as this day right here, then I'd suspect they're going to come right up here to the 200, also testing this high over here. Micron, stay long. You got a doji sandwich right here at the breakout level. You stay long, but just as a safety factor, you put your stop at today's low, which was basically the open. It shouldn't come back to that level now that you're up there in the overbought condition. XLE, you can see the fry pan bottom setting up. Anytime you see a fry pan bottom, you got one very simple rule. You just stay long as it doesn't close below the T-line. Ruby, get ready to short this one. When they gap it down, now they did a hammer type signal. Told you the bulls are trying to take control. But if they open it lower, it's pretty much telling you the bulls didn't take control. You can be shorting it. Freeport, another one you can be buying, but if I was buying it, I'd use today's open as my stop, telling me that they are still moving up away from the T-line. DRD, yeah, one of the gold stocks, just not doing anything. Right now we're out of the golds just because gold prices are just kind of waffling. We recommended CNCR. It opened lower. But came back up above the T-line. You can still be a buyer of this, but I'd use this area right here, like the 3650. That if it came up through there, that told me that belt hold, this little baby belt hold kind of told you they took out some sellers, so there's less sellers in the way. EGRX, another one that has to open positive tomorrow to stay in it. U.S. Bank Corp. This one, if it opens lower tomorrow after today is bearish harami, it means they're probably coming back to test the T-line. That's a question that we usually address in the chat room, whether the high premiums. We have Michael Tomset come in every day for 2 or 3 hours going through different strategies. So yes, if the premiums are excessively high, you may not want to be buying the calls. You may not want to be buying the puts. You might be doing a credit spread or a debit spread to take advantage of those premiums. No, and right now in this market trend, I wouldn't be buying calls or puts outright on this one. Let's see, did I do AV? Yes. What did I just do? BAP. All you can do is stay long. Not a very exciting mover, just in a slow, steady uptrend. And XIV, another one where you can stay long. Just be aware that you're getting toward the top of the trend channel, getting up toward the overbought area. So another one where I'd probably have my stop at today's open. If it came back down through there, that tells me they did run into resistance up here. Primo Water, still nothing I'd want to be long or short. No direction to it. No strong buy signals. I just wouldn't be trading this one. Oh, what's HG? HGAN. Eric, I don't know what HG is. Is that, are you looking for hogs? Oops. We're still long hogs right now. Or at least I am. CWEI, not a good signal today, but you're still above the T-line. Use the T-line as your stop. Stay with it as long as it doesn't close below the T-line. The Qs, you can see after the little gap up, you're still heading in the right direction. And DGZ, stay long on this one. Nothing telling you there's any, oh, that's the short gold index, okay. Another one that you stay long as it doesn't close below the T-line. So this one has to open positive tomorrow to stay in it. EW, having a hard time. This would have been one where if I was short or to cover the short, now I'd be ready to go short again because you've got a bearish J-hook pattern and probably coming back down to test the bottom of this trend channel. So I'd short this one on weakness. And Electronic Arts, this one I'd be more apt to buy at 76, knowing the J-hook pattern is still working. Polaris, this one you can be buying if it comes back up through today's open. There was a lot of profit taking today, obviously after two big days in the market. There's some profit taking. So a lot of these that haven't closed below the T-line you stay with. Scotty, definitely want to see this start trading positive or stay above the T-line to stay in it. Getting some indecision here. The China, the large caps, you can stay long on this. Just watch to see what it does once it gets to the 50. And Brazil, stay short. Oops. This one's probably in a bobble. So notice what happened when it hit the 200. Started selling. So you have a left-right combo. This one's very simple. If it opens lower, you close out the position, and then you just put your buy stop back up above the 200. It may take it 3 or 4 days of a J-hook to get back up, but you don't know if they start selling it or they're going to take it down to the 50. If they open it lower after a bearish engulfing left-right combo, that's probably the direction they're going to be moving it in for the next few days. What is your stock scan criteria? I've got some very simple scans. My simplest is I'm looking for, I usually just scan for the stocks that had the biggest percent price move today. Because more than likely in the first 10, 12, 15 charts, I'm going to find 3 or 4 that were coming up off of candlestick signals and confirming. My next scan, if the market's in the oversold area, is I'm looking for all stocks that had a big percent price move today with stochastics in the oversold area. That means I've got an oversold stock that is now popped out to the upside. Then you could also do any other scan you want to. If you're looking for hammers, you scan for all the stocks that are trading below stochastics of 20 and did a hammer signal or a doji signal or any of the major signals. So that's one of the things we do on our website. We do the sessions, obviously, on Thursday nights for everybody. We do the same sessions for just members on Monday night. And then for members, usually at least once a week, we've got all that, the training videos showing where to enter and exit a trade, how to scan for trades, where to set your stop losses, how to use the T-line, how to use the moving averages, all that type of thing. But instead of just buying the videos at a discount as a member, we do those sessions live. So if you have questions, you can get them clarified or cleared up right there. WEAT, the wheat fund. Yes, wheat was coming up nicely. And cane, is that another? The sugar fund, nice steady uptrend. Stay with it. PSDV. You can stay with this one. Just make sure the volume's good on a $3 stock. Usually on a $3 stock, I want to see volume of somewhere around 800 to 1.2 million, just for the liquidity's sake. ALXN, another one where you stay long, but if it opened lower, it's kind of suspect that they're going to come back and test the T-line. TCSH, there's your big bullish left-right combo. There's your 45 degree. Only one thing you have to do is stay with it as long as it doesn't close below the T-line. CSC, there's your fry pan bottom. There's your big gap up. Now you stay long as it doesn't close back below this area, because that's where the bulls are telling you they were starting to buy. But I would suspect you're going to be in a 45 degree off of here. And CPE, another steady eddy. You just stay long on this one. TRV, this one you stay long, but if it opened lower tomorrow, I'd close it out, because that tells you you're going to be in the bobble. It's going to come back and test the T-line. So it definitely has to open positive tomorrow to stay in it. PRG, see, it is in the bobble. Came up, hit the resistance. Now they're coming back to test the T-line. If I was going to be a buyer of this, I'd put a buy stop just above here. Might take it 3 or 4 days to get there, but if it comes back up through, you've got your J-hook pattern bobble setup in progress. Boeing, nothing here. There's no direction to Boeing. I wouldn't be long or short. And CINF, just stay long as it stays above the T-line. OCLR, I'd rather see it get up above the 50, but it still has to break that downtrending channel. U.S. Steel, it broke out, but now you have to wait for the next buying. If you're long, you stay long as it doesn't close below the T-line. I would rather be a buyer if it came back up through today's open, telling you that the profit taking was over. SRPT gapped up the other day. I would suspect it's in a 45 degree to the upside. Johnson & Johnson, I never trade. It's one of the quintessential institutional traders. As you can see, there's no trend to it. I wouldn't be trading this one at all. Yeah, I think that's, oops. Let's see. CYBR, stay long on this fry pan bottom that went through the 200-day moving average. Another one that broke out through this level. You stay long until you see a sell signal and a close below the T-line. Delphi, nothing here. I wouldn't be long or short because I would have covered the position if I was short with it doing a bullish candle signal above the T-line. But I'd be ready to go short again, because notice where it closed, back below the halfway point of this candle that told you the bulls are in control. I'd be ready to short this one on the bearish J-hook pattern if it opened lower tomorrow. Deutsche Bank is a tough one to trade. Just, I mean, obviously as an ADR trading overseas, it just doesn't have the price movement that I'd want to be trading, and it doesn't have any major direction to it either. Devon, just stay long as it stays above the T line. The Pens just scored. All right, good. Okay, we did PGR, TRV, HRL, Hormel Foods. All you can do is stay short until you see a buy signal and a close above the T line. A belt hold, a belt hold, a belt hold. The only one I can remember is in the past over here. This is a belt hold. When you have a open way out of the trend, and then you bring it back up into the trend. I'm trying to think of what other belt hold. But basically what it does is it wipes out a lot of sellers. That means there's no selling in front. That means the next price move is usually pretty good. And the Japanese rice traders explain it as one wrestler trying to back out of the ring, the other one pulls him back in, the back of his belt. Yes, if it looks like it's going to close below the T line and there's only 10 minutes left to trade, yeah, I'll close it out. I don't know whether I get the SPX over here. No, for some reason it doesn't come over here. The SPY. There's your gap up. Here's your breaking of the downtrending channel, just like the Dow. Salesforce. Another one. This is what you call the message. Notice the fry pan bottom breakout, but then it was selling. But the message already was the breakout. So you just wait till the profit taking's over, which was on this bullish engulfing, then you can be buying. Oh, I think I figured out copper. Just nothing real wild and exciting about that one just yet. I think, didn't we do PGR and TRV? HG, I don't know how to get it up here. What is TF? Russell 2000, minis. You can see it's in a slow uptrend also, or good uptrend. AN. AN, very simple. It did kind of a doji day. It needs to open, and the stochastics are still heading up, so it definitely needs to open positive and trade positive. If it opens lower, good possibility they'll come back and test the T line. Dish. Another one that if it opens positive, you got a doji sandwich breaking out through this level, probably taking you up at least to here, and then eventually up to the 200-day moving average. Remember, on a doji sandwich, there's expectations. If you see a doji sandwich, first of all, you know the expectation is it's going to move in the direction of how they open it after a doji. So if it opens positive, you can be buying immediately with the expectation that this trading day is going to be the same magnitude as this trading day is here. And if that's the case, it's telling you that this level is not acting as resistance anymore. And the result of a doji sandwich is that it's usually going to be trading higher afterwards. Sam, our fee is $97 a month. We've got a trading room that's open all day long. We've also got another room, which is your futures and your options trading room. And you get 2 or 3 stock picks a day. We usually do at least one extra training each week on one of the topics. And the most important part, though, is the notice you're looking at a 50. No, this is this chart service, because I don't pay for live charts for the stocks. It's delayed 15 minutes. These are all daily charts. Yeah, again, I put out the 2 or 3 stock picks every day. Yeah, not so people have stock picks, but so you can analyze your chart and research why that was being made, that chart. But the nice thing about the chat room is there's usually about 170 people, 190 people in there every day. But you've got a core group of people that are very good at picking out good chart patterns. So once you latch onto those people, you'll have more trade setups than you'll ever be able to handle. RGR, you can get ready to buy this one on positive trading because that would be your doji sandwich breakout, kind of your bobble also. Let's see, the VIX, stay short. UVXY, stay short. Because I could make these a little bit more pronounced. Oops. J-hook pattern, I'll see if I can find one as we're going through here. Freeport, as long as it stays above the T line. If it opened lower tomorrow, it kind of tell you now you're just in a sideways trend channel. It needs to open positive and trade positive to let you know that your trajectory is still to the upside. Pioneer, I'd be out of this one. It's closed below the T line. You can see there's absolutely no direction. So if you can see there's no direction and you can't see any buy signals, you want to be out of that trade and move on to something that has a higher probability for you. I would guess, yeah, there's not going to be a whole lot of activity tomorrow. I would doubt if a whole lot of people are going to be around after noon tomorrow. AKS, notice what it did once it got to the 50. If it trades lower and you're long, you come out of it expecting a bobble, but it's going to come back and test the T-line before it starts heading back up. Tampa just tied it. Oh, man. And yeah, we did Netflix. Netflix looks like it's still trying to get up here to the 200-day moving average. What time frame work in E-minis? That's up to each individual, Mohammed. I used to trade the E-minis off the 1 minute, 3 minute, 10-minute chart combination, but I was trading very actively. You can trade whatever your time frame allows you or that you're comfortable with. You might use a 5-minute, 15-minute hourly combination or a 1 minute, 5 minute, 10-minute combination. It's up to each individual. That's kind of a belt hold, but usually a belt hold has a very significant move. This is kind of what I would call a left-right combo, and there's your results. 2-1 pens. All right. Thank goodness. Scrolling fast enough to see what the score is. MDCO. Whoops. Not a very exciting stock. All you can do with this, notice where you're bullish engulfing after a hammer off the 50. So your longer term chart, as you can see, right now is just in a nice steady uptrend. So you stay long as you stays above the T line. How much for options and futures room? Ooh, I don't know what prices they have set up for that one. That one you also have to email Abraham, and he can give you all the details. Abraham at candlestickforum.com. That's right. You get some funny jokes. They are the funniest jokes. Thanks, Moneyball. Yeah, we kind of set the whole trading room up so that everybody wasn't trying to reinvent the wheel. And we'll find that there's a lot of very helpful people out there to give you good picks and explain why those picks are good. So again, this is all a learning process. No new jokes. I just didn't have time to figure out any. Pam, nothing real exciting here on this one either. If you like it, you stay long. As long as it stays above the T line, I'd probably have my money someplace else. So, and HIMX, you can stay long on this one, but you can see the obvious. You've got a downtrending channel, which means the 50 is probably your target. So when you can see that, if it stays above the T line to get there, you just have to be a little bit more diligent once it gets there to see what it does at that level. Now there's your kind of your slow curve breakout. Notice it did a kicker signal to the upside. And how long do you stay in this one? Until you see a sell signal and a close below the T line. Okay, just a couple more, and then we better all go. I know you're all rooting for the Penguins. Whoops, did that wrong. Did we do Cyber? Cyber broke out nicely. UNP, Union Pacific. Another one that's not all that enticingly exciting. At this point, I wouldn't be long, I wouldn't be short, because you're in the oversold area. You're probably at the bottom of the trend channel, but you haven't gotten back up through these moving averages. And once it does do that, you're not going to get a real tremendously big return from it. Wynn Resorts, after it broke this downtrending channel, has to stay above the T-line slash 50-day moving average. Okay, let's see. No one gives you more. Okay. All right, thank you, Tim. Yeah, again, this is not a, we don't have a chat room that everybody's saying how many billions of bucks they're making. What it really does is kind of teaches you how to get your emotions out of the way and be in the right trades at the right time. And that's only part of it, being in the right trade at the right time. Once you're in there, you have to control your emotions to know when to be in and when to be back out. Let's see, EBIO. Is this one just one of those coming out of the bankruptcy? If I was buying this one, first of all, I'd make sure there's big volume, and then secondly, just use the T-line as my stop. All right, everybody, have a good evening. Again, the Pat's put out the T-line special, because if you understand the signals and you apply the T-line, you'd be surprised how you don't have to depend on anybody else anymore. You're going to be able to see for yourself when it's time to be in and when to be out of a trade. All right, everybody, have a good evening. We will see you bright and early in the chat room.